Morning, everybody. Happy Friday. Welcome back to Daily Profit Plan. It is just after 9 o'clock on Friday the 17th. OPEX today and the markets are down by a decent amount, actually. We are seeing, I talked about this core 1M, which is the 1 month implied correlation. And anytime this is below 8, I get a little bit cautious that we're going to have some pauses and pullbacks. And seems like 2 weeks of indecision is maybe leading us to believe that this market is going to pull back a little bit. So today, I mean, we're already nearly 80 points below yesterday's close, and that close, by the way, was a little rip at the last 10 minutes of the day. So we were down to like 75.05 yesterday on the S&P, and then we rallied up to 75.33 into the close. Here we are about 75 to 80 points lower. So not looking awesome today with the markets down 0.9% S&P. Qs are down pre-market. NDX is showing, let's see if we can just go Qs. I think we're down over 1% in the Nasdaq. 692, so about $13 different there. That is about a 2% sell-off already in the Nasdaq. And that's going to be well below the 50-day moving average to start. So we looking pretty ugly today. That also means that premiums will be a little bit higher, but I don't think this is the day that I plan on taking high risk. So iron butterflies that you set the credit, butterflies that are cheap and inexpensive. That's probably my tactic for today. Because without that, you're guessing. And obviously price can do a lot of different things. We can have the markets gap lower, go nowhere, gap lower, rally back up and try to correct, gap lower, press lower, gap lower, pull back, and then fade lower, fresh lows on the day. What's interesting is the last probably 3-4 years now, since we've had zero DT kind of offer this new stability in the markets, 2 to 3% is kind of a big number on like a single day sell off. Anytime the market's at like 2% lower, 3% lower, it tends to kind of have a, like a stopping point. Like that's like max pain that the market can maybe rebound from. But given that it's OPEX and it's Friday, we just have to let price kind of roll in and figure out what's next. So looking at the gamma profiles today, it looks pretty vulnerable, meaning like there's not a lot to go off of outside of, we are significantly lower than yesterday's close. So like I mentioned, we closed yesterday at 75.33. Okay, we're already down almost 80 points lower. That's huge, by the way. And our plus minus for brokers today is around 45 points. So I'm using a plus minus 55 today because of this smart range feature on Tanuki Trade. So that is 55.47. And that's the number I'm going to use for my expected move box today. 55.47. Okay. And that will be gap adjusted. So if we are going to open up around here, that's another 55 points lower. And it's going to be from this previous day's close and 55 points higher. Now that makes my call side extremely out of the money. Most likely a, 2 delta, 3 delta, 4 delta. The put side, if price is going to open and go 55 points lower, I don't know if I feel like calling a bottom today. When I looked at it this morning, there are 2 levels I think we could have a reaction to. 74.25, which this goes back to July 2nd. This goes back to July 8th. July 2nd, July 8th. Will that be enough to hold this market with a bounce today, or will we break this? Okay, will we break this? If we breach 74.25, will we get to 7400 and then also offer a bit of a bounce? That would be a decent sell-off today. If we get down to that low, that is a 1.48% sell-off. This is S&P. And if we get to 7400, we're about 1.75% lower. Some of the big, nasty single-day sell-offs we've seen last October, last November come to mind. 3%. A 3% sell-off. That puts us closer to 7,300 from yesterday's close. So if we get to 7,300, that is a 3. That's actually over 3%. So maybe if it's cheap enough, I don't know. I could just be throwing away money. But if it's cheap enough, there's that much pressure below, 74.25, and we just kind of get down to, I might look at a wild and crazy butterfly at like 73.50. How cheap can it be for like 30 wide, 40 wide, 50 wide? Do I think it gets there today? I mean, probability wise, it shouldn't. Expected move wise, it shouldn't. But if this is finally the one big day in 2 weeks that the market's cracking and having some follow through to the downside, um, I don't know. I think before I, assume the market's going to drop just off a cliff, it's like just look left. There's some support here that the market did find. We could find it again, and at the end of the day, this might be a, gap lower. This might be a gap lower that pulls back. This might be a gap lower that has some more follow through. Mike says, being Friday to leave the Monday. I mean, yes, because right now what we are in are I'm going to leave them in because the break even price is filled, the participation trade is filled, and they're both going to be upside down. So if I cancel the defense trades, then I have no chance at letting the market fight back. So if I get filled for a defense trade and we get paid on defense trade, we can still make money. So I'm curious if this gap lower is going to fill us. I think that pending order, let's check on XSP here. This is for engineered options. So pending order. Let's go working order for the July. Okay, so 7. This is going to be close. We have our 50% defense level is at 745. So we're going to trade around 74.60. So like 746. So if we have any additional pressure to the downside, this one might activate. I mean, that's fine. But I'll let defense be defense. That's why it's there. Nice. PO says, I got out of Flashpoint yesterday, but putting the tasty setup in a 24-hour market. Good work. Who got out with me yesterday? The reason I took profit yesterday is because we ended up having a pretty good day on double ups, and we were staring at like $50 to $60 per contract on. I mean, I guess it was 50. It was like 50 to 60 cents profit on Flashpoint. And we were already about 25% profit. Now I could have sat and hoped that the market went up, but because of that 10-minute rally that we saw into the close, plus adding that to profits at the end of the day, I decided, and I know it was close. It happened quickly because we got filled late in the day, closed late in the day. But that helps, cancel out the remaining trade, and then we have a fresh trade for today, and I just booked a winner. So for Flashpoint, the trade filled late in the day. So Flashpoint filled. This is maybe around like 3:45 or 3:50 p.m. And within those final 10 minutes, it was already up like 50 to 60 cents. So I took it. And if you, like PO said, if you changed it to your broker platform here, this would have been filled for SPX for Flashpoint. And it would have been the 20th expiration. So if you go into your trade to manage it, go into the 24-hour market. Let me just build the trade here. So we had a debit spread. So if you go into this section, it's a little hard to see, but inside Tasty. So down here where it says session, you change that to 24 hours and you can close whatever you want. So good. I mean, great plan. I closed it before the closing bell, but that would have been a good alternative to be like, I can just close it. So again, nice to book a quick winner. It was that. It was like filled late in the day, closed late in the day, and then we have a fresh Flashpoint up for today. Okay, nice. Larry says, got in at 240, got out at $3, out at $3, out at 290, out at $3. Good. Yep. I got 335. Wow, that's even better. That's pretty much hitting the profit target then. Evie, I see your comment there. I'm a newbie. When you post pending fill trade and double ups, are we? I mean, you can take whatever you want. So when I post a trade as is in my alerts for members, the one thing I want you to be able to do is navigate your broker platform and take the trade as I'm putting it. So, I, I mean, here's an example: double up alerts. Okay, this trade here. Where's the one like this one? This one here. Okay. I get people that will email customer support and say, Chris put this trade on for $10 credit. It's only showing $2. So I still take the trade. It's like, I'm not taking the trade at $2. So my one prerequisite for any member is that you have to be able to follow an option chain. There's the symbol, there's the expiration. Can you sell a call and buy a call and sell a put and buy a put and put in your pending order credit? Because when I put pending good for the day, that's what's going to happen. Today is potentially a really good candidate for a trade like this because there could be a lot of excess volatility in direction. If the market finds a high, finds a low, but has, some respected levels, it's like we might get a surprise 80, 90, 100 point move today. And if we can do that, well, let's risk 2 to make 10. Let's risk 2 to make 8. Let's risk 3 to make 12. We can set that trade up. And again, it may not fill, but if it does fill, we are only setting ourselves up for a high reward trade. Okay. And if you have any difficulty like following this stuff, then, review some videos online with your broker platform. Go through my options trading bootcamp. Get with a customer support team to help them navigate an option chain with you, whoever that broker may be. Okay. But yesterday, I took 3 trades, lost 2, win 1, and still netted out profit on the day. And our actual winner was 347%, which is pretty sweet. So it does pay pretty well. And we weren't even like spot on. It could have been a much bigger winner. If we closed around like 75-30 yesterday, 75-25, we would have had a monster win yesterday. That would have been, that would have been $1,800 on a $2 risk. It was $205 for our debit. So that's a 9-1. That's how we do it. So yeah, I can absorb 2 full losses and win 1, but my winners, 800 or 900%, it pays pretty well when the other ones are small losses. Okay. Scott, we'll see where they're at today. The markets are pulling back, so we will see. If I feel like JP Morgan might be the one that's going to be paying us today, the other ones might be down. Dude, they're all small risks. I'm risking like a total of I think $250 on all those calendar spreads. So if I'm dead wrong, I'm dead wrong. But here we go. I will know more when price opens because everything is looking to be leaking lower. So JPM, which was near the top of that yellow box, is now going to be back in the middle. I'd love to see this thing offering up, maybe over $100. I want to see where this is at opening bell. Like net, if it's a small loss, okay. If it's a small win, great. If one of these is ideal in that calendar spread profit trap, awesome. But there's 4. They're like Citigroup and MS Morgan Stanley is down near the lows of that calendar spread box. Bank of America is still near the high. JPM is actually like looking much better today. So I want to see what this looks like at opening bell. And I might manage this within the first like 30 minutes or so. JJ, test it, dude. You can do whatever you want. You can look at all the iron condors and all the strangles, and you want to throw stuff out there. It's like, then test it. Use option omega, test it. You can see how valid it is. There's hundreds of symbols to test. I mean, look, a test is great. Manage the risk is the most important thing because what happens with that plan is you're not going to win every trade. So if you want to go after that, 78% credit, that's fine. That's actually way higher than like a typical like close it out at the halfway point, close it at 50%. Like that's kind of tasty one-on-one management to reduce volatility, but test it. You can't just throw a blanket strategy be like, "What do you think?" It's like, "Dude, I love any strategy that makes money." But to do the same thing for every stock all the time, it's not going to be a winning not everything's going to win. So it's how do you manage that trade? How do you manage risk? What happens? How bad is it if it goes against you? It's like that's a strategy. That is the one thing with like their options. It's like it's 3 and 4 dimensional trading in options. So you can have the best game plan and the silkiest, smoothest back test ever. But if there's a wrinkle to that, there's a blind spot to that, I'd like to know that. You know, that's what I'm trying to figure out is like, where is my risk and where's my blind spot? That's why it's very important to know, like, when I place a trade, where does price have to be for me to make money? What happens if volatility doubles or triples? If we go from a 15, 16 VIX to a 40 VIX again, what does that look like? Right. So, but I'm all for it, man. Like, test and trade whatever you want. Build strategies in your brain until you think it's going to be perfect, and then try it. You know, it is a game of survival, and you'll discover that managing risk comes back to like that's the most important thing. All right. So look, we have a pretty negative news cycle hitting right now. It's like we've got escalations in the Middle East right now. Chips are down. There's threats of people. I don't know if they're going to vandalize or ruin or destroy these data centers. It feels like the pitchforks are out. The pitchforks and the torches are out. This is becoming like a populist, I guess, a debate. This is going to be one of the hottest ticket items for the midterms. Is is AI right for our economy? It's like I don't know. I think that when it just feels like it is all in and we're stuffing AI in cities and counties and we're like, yeah, 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 we'll bring it. I mean, it's probably taxes and subsidies and blank checks to like have a reason to have construction, have some growth, have some jobs. But like once this build out happens, think about what happened with like all the fiber that was laid. I think the thing that scares me about this AI build out, and I'm not bearish, I'm just saying like what scares me about the AI build out compared to like laying fiber optics or laying cables during the dot com run is that this is so much more expensive to maintain. You build the data center, you're building it with components that are going to change every probably 2 to 5 years. So the maintenance on top of the cost of building is really ridiculous. And now it is a battle between we and the US are going into the hardware side while the China's like, we're going to go software, which is why you have their, AI models and their modeling is not as good, but it's getting better. And companies are even looking at using some of these models just to save costs. So if you're a small business or like a personal consumer of, large language models or Claude or OpenAI or whatever it is, great. It's not that expensive. But if you're, did you see what Meta had spent? Meta had like hundreds of billions of dollars in tokens. There's been a huge cost associated with usage, and companies they were rewarding their workers for the most tokens, and so smart coders, developers, and engineers were like, "Yeah, I'll just put this thing on autopilot and just burn through a bunch of tokens to accomplish maybe a couple of things, but not nearly what was required." And it's just to like have token usage. So, and there's a price tag to that. So anyway, it's an interesting like kind of fever pitch of where we're at. It's like it just seems right now it's like are we as a society like really endorsing this? It's like government is. They want us to love it. They want us to invest in AI. They want us to tell us it's the greatest thing ever. This is going to be the biggest revolution in our lifetime. Cool. Do we have jobs from it? Are we losing jobs because of it? Are we now competing? It's like I think it's going to reward the entrepreneur. And it's it's hard to think about where life and jobs and everything will look in 5 or 10 years. We may have an entirely new industry to come of this, and maybe it is more rewarding. But I think if you're, somehow not leveraging this or somehow not, utilizing it in some capacity to be more productive, whether it's a small business or for bigger companies, it just seems like it's an uphill battle for what this could be for corporate America, which is corporate America wants this to be. We want the most profits and the biggest bottom line margins ever, and we're going to get there because of AI. And so it's full scale build out, everything all in, and you know, cost right now, it costs a lot, but it's going to be justified. It's like that's a big question mark. So AI is like the South Park underpants gnomes, where you build AI. Step two is question mark, right? And then step three is profit. I don't think we know what step two is yet. All right. So we'll see. But I keep going back to this. It is such a big spend. It's hard to fight. From a market perspective, look, we can have some pullbacks, we can have some headwinds. I don't think that President Trump and the US government are going to be like, you know what? I think we got a little bit over our skis and maybe a little ahead of ourselves in this AI stuff. I don't think they're going to throttle it back. They'll just stop talking about it as much. They will try to tone it down in the media if they can. They just won't talk about it. So will build outs continue to happen? Will it be like a blank check for build all the data centers you want, show that there's growth on paper? I mean, I think that this boom is still, 1, 2, 3 years in. Like we can still get, legs into this bull market, legs into this entire build out. But it's the, what's 3 years in, what's 5 years in, when it's laid out and it's like, now what do we have? A bunch of huge data centers that go through maybe their first rounds of repairs and first rounds of updates. And it's like, oh crap, we not only spent trillions of dollars on this, but now we're spending hundreds of billions to maintain it. That's a very expensive undertaking. So unless things get cheaper, do chips get cheaper? Does compute get cheaper? Does energy get cheaper? Doesn't seem like it is right now. That's the inflationary pressure that AI is putting on. Like we can see it. AI is putting on inflationary pressures. Things are sticky. Costs are going up. So anyway, that's it. You like that, Phil? Yeah. I got plenty of South Park references. It's one of my favorite social commentary shows ever, man. Underpants Gnome stuck with me for a while. I like that one a lot. Yeah. All right. So we have a couple minutes for opening bell. We continue to grind a little bit lower. I mean, it's 7450 now. We're 80 points lower from yesterday's close. It is, I mean, pressing red. Even the end of day and pre-market prep levels are looking to maybe test. My smart range here is now up to about 58 on the day. So I'll make an adjustment here. So 55, I'm going 58. That's higher than any broker platform. And that's just to kind of help give me a reference point of if dealers are paying attention to levels today. I could see the markets maybe that 74.25 area, which we had previous lows, 74.25 and 7400. If we come into those areas, the market may have a reaction. Look at this thing. Oof. That is some momentum. I mean, I feel like the entire week posture has changed just overnight, given all this back. So look at futures. Yikes! The black line is daily VWAP, and it just tested around 7 a.m. this morning and just dumped another. What is that? 20? It's another 30 points lower. NQ, couple of kisses. So that was at 11:30 last night. That's a big drop there. Like 2,900 or 29,000 down to like 28.5. That's almost a 450 point drop overnight on NQ. So yeah, aggressive stuff. Nasdaq's down over 2%. So again, I put 2 to 3% out there with get a sign in the MS calendar spread. Really? I mean, it's a buy call, sell call. So net, if you close out the two trades together, the max risk on the trade should be the debit that we paid. So you should be able to close out your, I mean, they're only going to sign the short side of it, right? They're not going to exercise your long call. And MS is down. So I don't know why they're assigning anything. You have a long call, you have a sell call, and price should be lower on MS. So when did you get assigned? All right. Anyway, I'm just saying, be prepared, man. Today's going to be potentially a pretty ugly day, or I should just say a volatile day. Try to figure it out. But the point is, if you have an assignment, it's like you should still have one side of the trade still open. If you close out any shares plus the other side of that trade, it should equate to about the defined risk trade in the call calendar spread. So on that note, JP Morgan showing about $40 profit. The other ones are down. I mean, max loss on Citigroup is $81. Max loss on Bank of America is 46 for me. Max risk on Morgan Stanley is 135. So, I mean, I can close everything down, take a small loss on the net. I mean, if this is going to be correct. So I'm up $42 on JP Morgan, down 16, down 54, down 84. I'm down $100 on those four trades combined, $112. Okay. So we took a stab at some financials and they had outsized moves. Well, there's JP Morgan now, $130. I'm going to try to close this thing down. It's about 100% profit. I want to close it. Or do I let this thing run? Probably smart just to take it and take even a smaller loss. So let's see if we can get out of JP Morgan. Where's it at? Because ideally, like the perfect price on JP Morgan is going to be at our strike prices. We're back to 336. This actually is pretty spot on. Our sell price was 335s. So JP Morgan's huge. That's going to be a nice winner. That'll offset most. I mean, we're still going to take a net loss on four trades, but that certainly helps to have one big winner. Keep everything pretty small. Okay. So if I can get over 100%, I'm going to take it. Right now we're at about 103%. JP Morgan. And it could, I mean, if I think I have this trade built out in Option Omega. Let me find out. Models. Did I build out that JPM one? Yep. So right now, by the end of the day, it's like this could be pretty ridiculous. Like we might have JP Morgan offer us a big, ridiculous profit trap today. And that's enough to cover the risk of everything else. So, I mean, if I'm going to try for this, if this gets better and grows over 100%, maybe looking at like, what's my break-even point? So I need, it may not be enough. VCX just filled. Dex VCX. VCX. I'll see what that is. So if I have, let's say, minus, I'm going to go max risk on the other ones. Minus that, minus 46. So the most I can lose is 262. If I take a winner on JPM, it's just going to offset that. So if I can see JPM creeping up towards, $150 to $200, I mean, the max profit here is around $300. So this could be enough to offset all the risk, right? We'll see. If you want to take the profit and just minimize the damage because you're taking partial losses here, see what I'm saying? Like, look at this one. And I'm not in a rush to jump into daily profit play because honestly, with a day like this, with crazy gaps and massive negative gamma, going into like, hey, I'm going to do a iron condor. I mean, I don't want to take $1,000 risk for $100 profit. I want to have only small risk trades today with high reward opportunities. Okay. So this one is not quite down max loss. This one is, only saving me about $10. This one saved me about $30 to $40. I think what I might end up doing here, I mean, Morgan Stanley sucks, but if I save $40 in this one, I actually have a break even or better in Bank of America. Let's check this one too. Bank of America. Let me analyze this one if I can. So where does price have to be? Our strikes are 59, so it's above. Damn. So we're just outside of our level. So if Bank of America goes to highs today, that's gonna be a loss. BAC. All right, this actually is looking better. All right, here's my kind of game plan for these trades. I think Morgan Stanley sucks for this trade, but I'm going to save myself about $30 to $35 by getting out of it now. Citigroup is already down like 70 of the max 80. So I'm going to just save like 30, 40 bucks on Morgan Stanley. I'm going to try to let JP Morgan and Bank of America carve out winners for us if we can. So let's see if we can get out of this one. $1.35, close it at like maybe 30 cents credit. Oh, it's down to 16. Yuck. I'll try 30. That's probably not going to fill. This might be a bigger loss than I thought. 16. Well, fudge, man. Can I save myself 25 cents? We're trading at 209. So all we really have left in the trade to get us out is time, because price is not in a good spot for us. It's pushed quite a bit lower. I'll go 15 now. Fudge. Well, maybe I can save myself 10 cents. All right. I got out for a 10-cent credit on Morgan Stanley. So I'm down. It's a $125 loss out of the max 135. BAC, this one might still come back and be profitable. JPM, I think this could be a bigger win today. We could probably get this one up closer to 200 bucks, maybe more. So if I want to save myself 10 cents on Citi, where's Citi at right now in this box? It's way outside of it. So unless Citi's going to rally hard, I mean, if I can save 10 cents in this one, I might as well. And then I let Bank of America, JP Morgan, hopefully give us a win. So this is showing that was an 81-cent debit. So I don't want to close it out for an additional debit. I want to close it out for a credit. Let me see. That's weird. Can I get like a 10-cent credit? Probably not. That's not right. Oh, there. The heck, dude? All right, let's try like 15 cents credit. This one might just have to like settle on its own. All right, just closed out for 9 cents. So 81 cents closed out at 9 cents credit, which gives me a loss of 72 bucks. I'll put these in Telegram for us. So newsbreakers. Newsbreakers update. MS closing for small credit, reducing max loss. Citigroup closing for small credit, reducing max loss. BAC and JPM are inside the call calendar spread boxes. So let's see if the profits show up and grow for the day. So JPM especially sitting around 100% return, but may potentially grow to 150 to 200% gain around the 330, like 335 area. So this one closed out. And then MS. Closed for 10 cents. Okay, so I'll let those other ones marinate. So Citi is out, MS is out, JPM, it's up 170 bucks. This could be really good. We could get this one up over, $200 today, maybe, up to potentially $300+, which does cover the risk on literally every trade. So, even if Bank of America is a small loss, that one's only risking 46 bucks. But it'd be nice to see this one maybe go break even or better. So really all of it right now is how well can we get JPM to perform as far as net profit? Because if this creeps up to 200+%, we're walking away with 3 losses, 1 winner, and making money, which I don't complain about. Okay, but I want to manage these trades before the end of the day. Yep. So I'm going to see how big this one can get and enjoy some profit, hopefully. Yeah, Bill, those are going to be full profits, though, right? Waterfall profits, absolutely, man. Full profits. So if we go to waterfall income, for July 17, we have trade number 141, trade number 140, and trade number 139, all closing for profit today. So 3 full winners with today's expiration on waterfall. Yep. Okay. All right. So a little housekeeping there. AVGO. All right. This is something. I feel like this is this a pinch? Yep. 360, 370 for a 350 debit. Man, this is going to be close. Can AVGO just bounce back at all today? Come on, man. Give us a bounce off this 200-day. Keep an eye on this one. Pinch point, we're filled. And we got filled I don't know when that filled, actually. Had to have been recently. So I'm going into pinch point, trade number 141. Okay. If we get a bounce today, so we're at a 360 by 370. The most I can lose, I'm down 50 bucks right now. Now, if it stays at 360 or goes below 360, I have a $350 loss. If it bounces, and this is a big if, and maybe this is a silly trade to ask, but did everyone see what happened at IBM yesterday? I took that trade on IBM. We had like a 200 by 205 or something. And if I just sat on it for the day, it would have been worth like 260 bucks. But AVGO right now in the heat of the sell-off, is this going to get worse or better? So I'm curious, just on the individual stock side, does it offer any type of intraday support? If it bounces back up to like 365 or better, we're going to see a break even. Because our break even is 360, 363.50 on a 10 wide. So if the market bounces here, we might get this thing back to like 360 and change. But I'm going to set a chart alarm at 352 just to see if it's not reacting off that 200-day moving average. That's gonna suck. So I don't really love the idea of taking a loss on that. If you want to bail on the trade, bail on the trade. You don't have to take the 350 risk. Right now it's down about 100 bucks. So you're saving a decent chunk if you're worried about the trade. It's literally an all or nothing trade. Is it worth it to close out for a $100 loss versus watching price just stay down all day and go for a 350 loss? The trade-off is if I let it ride, I can make 650 bucks if we have a bounce today. If it doesn't bounce at all, guess what? I'm down 350, which can suck. So executive decision, I mean, because we got filled in this trade when? This morning? Is that correct? I don't even know when this trade got filled. Probably this morning. Um, I mean, if we give it a fighting chance, we got a chance of $650. Can I make 350 bucks up somewhere else? Sure. Yes. I mean, we need price to basically get back to 363. If we get back to that, we wash away a lot of the risk. So we got to manage some AVGO today. We'll see what Bank of America JPM does for newsbreakers. So if you want to get out of the trade early, I'll put this in for pinch point Telegram. So there's a lot going on this morning. So pinch point, trade 141 AVGO filled at 350 debit, 10 wide spread for 650 profit potential. Because the AVGO trade it's all or nothing. Price is close to the 200-day moving average. So if there's a bounce back up to 363.50 or higher, that's break even. If price is below 360, if you want to save dollars on a smaller loss, you can close now for less than $100 loser. Okay, I'm going to let it ride and see if the market, I just put here in the Telegram, if market has a fight in it today, if that bounces off that 200-day moving average, maybe gives it even just like a $5 push, $5 thrust, that might be enough to get me a break even or better. So we'll see. In fact, to be on the safer side, I'm just going to try to grab a small winner here. So let me see if I can close this thing out for like $4. Give me 50 bucks on it, survive the trade. I'll kick myself later if it's like, oh, look at that, AVGO just ripped up $10 today. Well, that's on me. Let's go 450. Let's try to make 100 bucks on the trade. And if I lose, I lose. But if we have any fight left in this market and it wants to bounce up a few dollars, then maybe we can sneak in 50 to 100 bucks. Okay, JPM. Hanging out. So if we're at 340 something, we'll see what price does. Ideally, I like price to be back under 340 today if possible. So if we come back, I mean, what would be ideal today for JP Morgan is we had this little green. If we finish flat on the day around 339, that would be a pretty good profit for us for that newsbreakers trade. So AVGO, I'll keep an eye on it right now. It's down about 60 bucks. I mean, again, not a bad decision just to close it. I mean, a $350 loss, it's something, it's like I get annoyed at losses like that. So maybe being down 60 bucks and it's like, I don't have to worry about it anymore. We're not at break even or better, right? Like our break even is 363. It's a small loss. So right now I'm down 50 bucks. All right, I'll take a small loss. I don't think it's worth sweating this thing out. It's down 30 bucks right now. Might have a tiny little comeback trade, but I don't mind taking a 30-40 cent or $30-$40 loss. I'll kick myself later if it's up to like 365, but it's my decision. So, all right, I'm going to take a small loss here, down like 30 bucks. 330 maybe. 325. $320. All right, just got out for 320, took a $20 loss. It's a lot better than 350. Well, how quickly did I change my mind? I don't know, 3 minutes. 3 minutes later, changed my mind. Closing for a 320 credit and taking a responsible, it was a 350 fill, so a $30 loss. All right, so that trade for AVGO number 141, getting out at 320 credit. So a tiny little 8.6% loser. Okay. Keep an eye on Bank of America. Keep an eye on JP Morgan. Come on, guys. Don't get too high at freaking 340 and change. Sub 340 would be great. 337, 336 would be awesome on JP Morgan. Let's have a look now at some SPX. We're at 55. Looks like prices haven't really done much since the open. So we are, gosh, look at that. So we just came right back down near these lows and the market is responding. I mean, is that the low of the day? I don't know. It very well could be, and the market's going to spend all day grinding back up to this gap. So if I were to center this thing, 745, I'm curious. Like if I did like 749 or 750, let me see. Let me look at Gamma first. I'm looking at a double up trade for like an iron butterfly. I mean, it's so much red. It's so much negative Gamma. It's hard to really pin this thing. Smart range is calling for like a 75 and change, like 75.10 to like 7,400. Let's see, HVL 7540. All right, let's see. I'll go 745. This is going to be for double ups. It's not going to fill yet. It's going to be a pending order. So there's no more AM expiration. Just use the July 17th. 745. I'm going to go 15 wide here. And see if that will offer up like 1250. No, wishful thinking. So I'm going to risk 2 to make $1,300. Now, again, it's not going to fill unless price moves a lot. I take these trades almost every single day, rarely getting filled on them. But if I can get filled and it's offering a 6.5 to 1, I'll take that trade every single day with little to no fills. But when it does fill and it wins, it's going to be pretty straightforward, making, maybe $100, $200, $300 and making more than risk. And that covers me. Why am I choosing that level? Because a 3% sell-off today puts us down to 7,300. So if we get down there, I want to get filled with this type of credit and then bounce off 73. If there's any bounce, that'll get us paid. But I want to be able to accommodate a move like that. So it may not happen. But that's my wing. So if I can get $13 of that, I just need price to be back above 732 in order for this thing to be profitable. But anyway, so this is the trade that I'm taking. It's going to be a pending order, good for the day. It most likely won't fill. Okay, it most likely won't fill because if you're asking for this type of credit, you're going to need a lot of direction. So that's the play. Yeah, Dave, you probably know what's going on. You've got 2 positions in the red. We haven't been filled on defense yet. So you have a participation and a break even. They're both in the red. So you need the market to fight back already, or we need to try to get filled on a defense trade. So, all right, I'm going to put this trade in pending order for $13 credit. So I'm risking 2 to make 13. I just need to see if price will have wild and crazy movements. So double ups, going to be another pending order. Pending trade, pending order. 717. Okay. We'll have a flashpoint trade out as well. We'll take a look at that. So day for engineering options, I have 2 trades in. There's my participation trade. It's down. And there's my break even. It's the market is not break even for the week. Okay. Our defense still working. Defense trade is trading for 30 cents. I'm asking for 50. So we'll see. I mean, if we get down to like 745, that's pretty much where we opened today. I'm surprised it was not a little bit closer to getting filled today. So I'm just going to let them hang out, man. If the markets go back up, I need price to get above 754 for my break even to be better. So can the market somehow carve out a break even or better week? I mean, not yet. What? Defense filled. So you got filled at 50 cents for that 745? Oh, they're SPX. Oh. Dadgum liquidity on XSP not getting me filled. I mean, it had to be close. All right. It's in Telegram. Well, I'm happy you got a defense trade filled because you got a fighting chance now. This is double ups. I don't know why it's not in Telegram. So did anybody discover when you weren't getting alerts on newsbreakers or whatever it was before, like, was it something in Telegram? Did Telegram have to be updated? Did you have to turn your computer off, turn it back on? Like, what was the deal? It wasn't on our end. I mean, the message is right here. This is my pending order I just posted. So it's there. Okay, it's there now. All right, good. Good. All right. Daily profit play. Maybe down here towards like 73. Let's see what 73.50 looks like. We'll see. Oops. IB's up to 35. Expect to move on the day. Don't choose the AM expiration. What's 73.50? It's a 2 delta. I'm going to hold off on daily profit play today. Unless you want to go really, really tight to price. I mean, this is like a 73.80. 73.80 is not terrible. Like 15 wide. Okay, 15 wide for 50 cents. But what's that delta? That's a 6 delta. If I match that, I mean, I'd want to be put a call. I'd want to put the call side probably back above like 75.50 if possible. That's a 4 delta. I mean, even that, it's like 20 wide for 90 cents. Don't really love it. What was our low in the day? 31. I mean, it just looks like this area just held for now. I mean, we could roll back over, but if we get a decent rally, like this is 33, I mean, if we rally all the way back up here, that's pretty darn impressive. So I'll see. This is going 20 wide, 20 wide. I will ask for $2. And if I get filled, I'll play some defense. All right, I'm going to put a pending order for daily profit play. Okay. Look at AVGO. Don't make me look at it. Ah, I knew it. Of course. It's right at the 200-day moving average, which is why we put the trade there in the first place. So, I mean, again, it could still settle. It could, I mean, look, the low of the day is around 57 or 58. It could still settle below that. So don't get your hopes up. But yeah, if you're taking that, I mean, right now it's trading at, look at that crap. Now you're up $1.40, $1.50. Disappointing. Can't say I'm surprised, but you know, a $30 loss does not break the bank. And if it heads up higher, it's sitting right at a 200-day moving average, and there's the bid right there. So this market might surprise us with a fight today to the upside. So if you're still in it, well, there you go. Day of expiration, market's got some fight in it. You're seeing profit. What a difference, you know, 10 minutes makes, I guess. It's crazy. Yep, I am. I'm kicking myself, but you know, I'm not kicking myself as badly because if I took that $100 loss, I'd really be kicking myself. But $30, like, okay, fine. You know, no breakfast today. Yep. So I mean, and what's crazy is like it's getting better. Here's now 560. So now that trades up $200. So yeah, if it really pissed me off if yeah, we're up to 370 plus and this is a $650 winner. Yes, that will annoy me. But you know what? Nothing I can do about it now. So if you're in it, great. If you're not, whether you took a $100 loss or a $20 loss or break even or small win, who cares? Trade's done. So not gonna obsess over it. JPM. Let's see if this thing can fade back down to like 339 today. I'd love like a little bit of a sliver, like a sliver candle here. Like it's green on the day, but just let's see if we can fall back down and finish flat. That'd be a pretty good win on JP Morgan if we can get there. I don't want it to be up here to like 355 and 6 because this trade is yeah, like that 345 and 6 level makes that profit very, very small. So don't be too bullish here, JP Morgan. I'll set a chart limit at 345. So hopefully it's just flat on the day. Meanwhile, is Citi coming back? They're still way out of the box, though. Morgan Stanley. Yeah. I mean, they're fighting back, but those are still going to be losses if we didn't manage them. So hopefully JP Morgan gives us, I mean, a sizable winner. I mean, I wanted that thing to hopefully be up over 100%. And right now it is not. It is up about $70. I was staring at 170, 180 earlier, but that was when it was around like 337. So we'll see what happens. But market looks like it's got some fight in it today. It's still recovering. Let's see what happens. I mean, what is this rally, by the way? If we rally off these lows to 75.50, I mean, that's a 1.6% rally. Could that happen for an OPEX? Yes. In fact, I'm going to do this. I don't like daily profit play. I think it's a guess. It's a freaking guess. Like, I don't want to call the top. So to me, I don't think it's worth throwing in $1,800 risk to guess when if I follow my routine with daily profit play, my high needs to be up here, not here. So I'm going to modify daily profit play and I'm going, this is probably not going to fill. I'm going to cancel this trade and I'm going to modify this. Okay. So, changing DPP order. So cancel trade from 959. This will be my new pending order. So 717 expiration. I'm going to go sell the 7,600. Actually, I'm going to go 7,605. 76.25. And I still like the 73.80. 73.60. Okay. So I'm going to modify that one. So 76. It's way up here. Way up here. Just in case on this recovery move for the day that Trump decides to tweet on top of it. And that way I look at my expected move box. Price would have to get all the way up above. I look below, gap adjusted. This is a 7389. So if I'm at 7380, see if that sticks. And it may not fill. So 7380 by 60. All right. So it's trading for 35 cents. Would I take the trade at $1? Maybe. If I take it for $1, though, defense is probably going to eat into 30, 40 cents of that. So I'd like to at least see like $1.25 or $1.50 if I take this trade, but I'm going to put it in for $2 for starters. Okay. I'm guessing this one doesn't fill today unless we just have like a ridiculous move. It's probably not going to fill. So let's just look at some structure. There is a decent amount of potential resistance here, just around 75. We could have a gap fill at 33. We could find the stickiness of 75.50, which has been all week, which is why I don't want that to be my top. So if the market's going to fight back, maybe gap, maybe find support. So this support becomes resistance. Maybe that kind of settles us in for the day. I don't know. But like I said in the first thing this morning, it's like because of this negative gamma environment, because of what prices are doing, it's like it's OPEX. There can be some wild and crazy shenanigans here. There's already a decent amount. This move already from low to high, it's already up 56 points. If this comes back up to 7,500, it's like we're talking like that's a 60, almost 70 point move from the open. So we'll see. Douglas says, no, it doesn't. It means that we make the decision, dude. Doug, look at it this way. Yeah, I'm kicking myself because now that thing is up probably $300-$400, right? Like, how quick is that? 320 credit is now trading for over $7. That thing's up $400. So yeah, I'm kicking myself. But at the end of the day, you have to look at what you did do is you saved yourself $2.50 of risk on top of that. So even though you closed out for a loss, okay, it's just a trade. It could have been way worse. Like if price was down and it stayed down, it'd be worse. But it is not a bad thing to in 20 minutes, we just went from, you took a $100 loss. I took a $30 loss, and now it's up $400. But am I surprised when I took a look at this chart and said, we're right at the 200-day moving average, the market might bounce? No. So I kick myself for not managing better, and I missed out on some of that profit. But if I was in the trade right now, I would close it. Like if you turn a 350 debit into what was a losing trade, and now it's showing $300-$400 of profit, frickin' close it. Because I'm not asking this thing to just rip up all day. It's like, just get me to break even or better. And it did. And then some. So, chalk it up as a lesson. What do you do next time? Well, either embrace the full risk, which would have been what I had to do. It's like I had to risk $350 in that trade. But I decided to take that tiny little loss and not worry about it. And that, peace of mind of not worrying about the risk, all of a sudden, we flipped off that 200-day moving average, and there's your comeback trade for, 300-400 bucks. So, but at the end of the day, it's just a trade, so I can tell you this, it is a lot easier to make up $30. It's a lot easier to make up $100 than it is taking every loss at 350 or bigger. I mean, our loss was a little 8% risk. We can make that up, no problem. We'll find plenty of good trades. But is it a little frustrating to see that it did what I thought, which is bounce off the 200-day moving average and see the market fight back today? Yeah. And it happened in 20 minutes. So, maybe next time we'll wait 20 minutes. And then we do that and it goes against us. So it's just a decision. No, I didn't. What's the MS calendar spread? Did you get assigned? What happened to you, Larry? It's way down. What happened to MS? I closed out. I mean, it's fighting back, but I mean, maybe it's just improving slightly. MS. I mean, you can save a little bit of risk here. It's, up 15 to 20 cents now. What was the other one I closed? City. City from 9 cents is now up 15, 16 cents. So, I mean, those risks are getting a little bit smaller. JPM, the profit is getting a little bit smaller, which kind of sucks. BAC is, I think this one's still upside down. Yeah, it's down 20 bucks. I mean, I will tell you this. If MS goes into this yellow zone today, that would bother me because that's a lot of volatility. And if MS does that, that means that probably BAC is above my box and JP Morgan's probably back to the highs. And I might take freaking losses on all of them. But the day isn't done. So, like I said, hopefully today is like we just fill the gap on JPM and then just settle back down. Settle the F back down. We'll see. BAC. I mean, basically, I need price to stay below 62 bucks on the day. Apple just flipped Nvidia. Wow, look at that. Apple coming out of nowhere. Well, was market cap 4.84, Nvidia 4.95. It's getting close. I mean, Apple posture looks a lot better than Nvidia right now, but good on Apple, man. I mean, it's funny that the price is going up because of inflation. Like, oh yeah, we need to raise. We're probably gonna have to raise prices and everything by 200 bucks, and the market's like, that's higher costs. That's more sales, even though it's just higher input costs. Yep. I know. Look, you want to keep talking about AVGO? Cool. Just rub salt in the wound. Like, I managed to trade for a small loss. It's now profit. So if you're in it, great. Is there any reason to let the MS short call expire? I mean, I'm already out of it, Larry. You're saying you want to break it up? Uh, I mean, if you close out so the long call's out the next week, right? I mean, time is not your friend on the long call side. So it's like you need to see this MS bullishness like continue really hard. Um, I mean, it's not a calendar spread. If you're not going to open it, close it together, it's like you're just trying to get lucky on the push. And over the weekend, that time decay is going to hurt even further. So if you don't get really any thrust on Monday, bullish, I think it's just going to be a wasted effort. Just thinking about like a long call, we're already on borrowed time. We're already past the halfway point once we get through this weekend. So if you open up on Monday and there's no aggressive movement on MS, I just think you're facing the uphill battle of like the time decay is now, let's say this is the trade from start to finish. Okay. You're already at this point. So coming into next week, if it doesn't give you a huge upside move, you're at the aggressive like waterfall theta decay, and I just don't think you're going to get that call side to turn into much. So I would hold off on that. Yeah, Scott, there should already be out. We just saw very little downside after we gapped lower and just started to go straight up. So you can look at Flashpoint. Why? What the heck? Yep. Hang on a second. I didn't see that. I just looked at the alert right now. Let's go. I'll take a screenshot since it's the team. I mean, it should be spitting out for all of them, like it has been. Okay. Yeah, Scott, I'll figure out what's missing. We should have had SPX and XSP come out for Flashpoint, and they didn't print. So I'll see if I can get the team to look into it and try to get some updates. We should be able to push an update for the day. All right, market's still kind of grinding higher. Any deltas, any gammas today? I mean, that's a pretty sticky spot right there. I don't know if it stays there, but like this is a pretty good front running candidate for maybe hanging out at like 75.10, 75.15. I don't know why of all prices like that would be the sticky price. That seems kind of random, but I suppose it's, yeah, I mean, I guess it's right in here. Like all this chop from the other day. What's this? This is back on Monday and Tuesday. Let's see if we get there. I'm going to throw in a little double up action. So like a 75, 10, or 15. If the puck wants to go that way, let's try to capitalize on it. It's not going to be cheap. So 20 wide. Let me assess this one. I mean, it's about a 3-1. That's a 4-1 right now. That's at full profit though. I mean, we want to see if it gets there. It's just so early in the day to be like, well, even if we went right to 75.15 in the next like hour, this trade might show us like 50, maybe $50. I'm gonna pass. I'm gonna pass. I shared all that Vasco and it was in a Telegram post when I did all the trade sizes. So what I did is I looked at the flashpoint with one contract, flashpoint with step up contracts, and flashpoint with martingale. I shared all that. It was a Telegram post like shortly after that masterclass. Dell. I mean, what about it? It found a bid at the 50-day moving average. It could just be sideways. It's certainly vulnerable. I mean, anything lower than that 50-day, it's like we got a gap fill. We've got, bigger fib levels to pull back to. I mean, look, this it's nice to see the market has a bid in it today, right? Could have been a lot worse. But I look at a stock like this, it's like maybe the upside, if you're lucky, is here. But the downside is like, do we just pull back and then fall lower? All of these spots right now, the Dells, the Microns, the SanDisk, the Western Digitals, all these chip stocks, all these compute stocks, all these storage stocks, they're all vulnerable. They're volatile, they're vulnerable. Like, just define risk, man. Like, I don't know how else to make it crystal clear. It's like, don't take a lot of risk on these trades. I don't know what they're going to do. I mean, if it's that easy just to buy Dell and buy Intel, then cool. Have some allocation to it and don't freaking worry about it because it's going to be noisy and volatile. But I'm not chasing this stuff. Like, I think the market's going to just continue to have this like really weird dispersion trade. And I don't know. I mean, Nasdaq, like, look at the Nasdaq today. It's down below the 50. Look, we could spend, and this is what is frustrating about the markets when you're trading intraday, is like this market could spend the entire day going up, right? We gap lower and we spend the entire day going up. And so all the bears that have been waiting for direction are finally getting it. They're not rewarded today. They're just going to take on heat all day. And the bulls, it's like, well, we just hit equal lows. So the bulls are like, yeah, it's a single day bet. And the market's up in a zero day space. So I mean, we have seen if the markets roll over, we've seen plenty of rallies in a bear market. And we're not in a bear market, okay? But is a correction needed? Is there tail risk? Yes. But today is like this gap stuff is not easy to navigate. When the market's down 0.8% to start, you have no idea if that's going to go down 1.5 to 2% or it's going to come back and fill the gap. That's a lot of movement. Yes. So I don't know what the day's going to give us, but it's certainly not worth throwing out a bunch of crazy trades and a bunch of silly risk and getting caught on the wrong side of something. So, is it possible for gamma levels to be tested around 75.15 or so? Tested, yes. Would I hold it there? Not really. I don't like to look at like butterfly pins, especially in a negative gamma space. It just is a lot more slippery. So I could see us getting there, but then rejecting. So that's why I'm passing on the butterfly spread. I don't want to force that trade. Okay. I mean, look at Mags. Mags gapped way lower. Apple's just off all-time highs. Amazon gapped way lower. Broadcom, we know. Okay, we know. Could have been a winner. I needed 10 to 20 minutes to just go into a short-term coma or be distracted by something. Google down. Do I change my structure on Google? Not really. I mean, there's great support here, probably a 200-day moving average. If I want to sell premium, this is big picture stuff, but either look at the 200-day moving average as potential support or look at this low. Like, this to me is a project options edge trade. Sell some premium down here. If the market's low to high, consolidating, and still trying to go to higher highs, fine. No assignment. Okay. Profit trap down here. Get paid. I think I still have that trade running, or if I don't, I might put another one on. So Google. Right now, I closed it already. Let me see if I can get something to Google that I like. So here is a 270 low. I'm gonna go back to like I don't know if this is good enough time, but going back to like 250 or so. So January. I mean, this should be decent. 275 by 255, maybe. It's not a bad trade. If I want to tighten this up, I mean, 270 by 255. This one's not awful. I mean, Ivy rank is 83. Build out a $20 profit trap. Probability of profit's 92%. That's with an Ivy rank of 83. My break-even price if I own shares of Google would be 230. So if I own shares of Google at 230, would I repair it? Yeah, I mean 230. I could take a 43% correction in Google. What was our 2022 correction? When the market was really ugly. Here's a correction in Google for 2022. It was down about 40%. Okay, sign me up. What is PT? Is that profit taking? Yeah, I mean, I'm going to stick to I'm going to stick to the history. The history is like the average winner is about 40%. So if I don't see the need to be greedy and try to go after 50, 60% every single time on a flashpoint, it's like the average is 40. So, I mean, if every day I put in a trade, if I'm going after like 40% flashpoints and 30% with double contracts on Tsunami, those averages are fine. Because that way, if I stick to the averages, I'm probably going to hit the win rate's going to be higher than trying to get like that 60, 70% winner. Yeah. So like I like the 30 to 40% average winner on Flashpoint, 30 to 40% average winner on Tsunami. I think that's a very reliable trade. We've seen a lot of intraday V bottoms that have gotten us, very quickly paid on Flashpoint. All right. Google to I like this trade. I can tighten this up. Like I can go, 265, but I'll keep this $20 wide. Let's see if I get a buck 50 out of this one, or maybe go up one more strike. Yeah, I'll take this trade. So this would put me down to 235 minus the credit. See if I can get 205 to $2 here. This is going to be for Project Options Edge. Give me $2. Not filling. Now it's a buck 80. Let's see. That is 20 wide. Cancel that. So 270, 250. This one's okay. It's only 15 wide. Delta's a little bit higher. Break even is now 230, 235 minus the credit. See if we get over $2 in this one. That was almost too easy to get filled. So 210 credit. I'm going to try to bump this up and get more premium. 225. Nope. 215. Nope. 210. Yep. So 210 looks like it's filling. 265 by 250 ratio spread. Filling. Okay. Uh, Come on. All right, looks like a 208 to 210 credits filling. There we go. All right, so Project Options Edge, new trade. Trade number 169. So that'd be a 235. So 235 minus 208. 232.92 is a break even. And I'll try to, again, if it's assigned, price has to be below 250 to get assigned. If it is assigned, I'll add a covered call, 2-4 weeks out, see if I can get $500 to $1,000 profit and just flip it. So that should be the plan. Anyway, like the trade, filled for 208 to 210 credit. And off we go. I know, I saw that, Tom. I'm trying to get the team to look into it. I'm not sure why we didn't get an SPX or XSP today. So it will probably pop up if I get the dev team to look into the algo and see what was missing. We just could just have to maybe ping the data feeds for SPX and XSP. PGR. Yep. So PGR, that's progressive. We did a ratio spread for Project Options Edge. It's the 180 by 170 out to January. So it's down. But looking at the deltas, go out to January. I mean, we're still trading at a 16 delta. So we still have about an 84% chance of profit on the trade. Do I think that Progressive is a bad stock to own? Oh crap. Do I think it's a bad stock to own? Not really. Do I want to own it? No. Oops, wrong one. I don't want to own the shares, but if I had to, I think that I would be pretty confident repairing it. So here's PGR. I mean, this price action on PGR might play out similar to what we saw in Microsoft, which is we put in this very sharp low. Okay, we put in this sharp low. We rally up here, we pull back, and we might come down to retest the low and then bounce again and just have this chop fest. Or it puts in a higher low and works its way back up. I don't know yet. But my strike is 180 by 170. So we have to have this thing from this high all the way down to a 160 something would be my break-even price. And from this perspective, I'm not saying that it can't go down, but I'd like to think that a snowflake analysis like this looks okay. I mean, we're 10 times earnings, discounted cash flow at 440. I mean, why would Progressive just get punished so harshly? I mean, it was a beat top and bottom, but like, what was it about the guidance? I don't know. I really don't know. I mean, Wells Fargo cut Progressive 12-month price target to 198. Okay, well, our strike's at 180. I still think trade's fine. It's just what we're dealing with is volatility. It's volatility risk. I'm down 130 bucks in the trade because of volatility risk. That's a big, sharp move in this stock. So that volatility is swelled. But when that volatility goes back down and we're looking like the probability of staying above 180 remains high, we'll start seeing profit on the trade. So this one can now move up to the 180 by 170. And that puts my break even around like the 160 handle. 159 actually. There. That's kind of what the new trade looks like. So that one's closed. But we have a 180 by 170. Yep. Scott says for yesterday's flashpoint, I'm still in. If upside down throughout today, no. I mean, if it becomes an all or nothing trade if you're holding till Monday. So if you're in flashpoint from yesterday, the market is still so that what was the fill itself? Is it 75.25 by 75.30? Was that our fill yesterday for flashpoint? If you hold it to Monday, it becomes an all or nothing trade. Like you will not make any money if price is below your buy strike. So at least if you close it out today, it's going to be a partial loss. I'm just not sure where it's at. What's it traded for right now, Scott? If you're in for like a 240 debit, what's it trading for right now? 180. I mean, that's why Flashpoint is built to manage it within like 1 day. Because if you're only down 60 cents out of 240, you're only down 25%. With that time premium, you take small losses. So I would say that the game today is, can this get back up into, closer to break even? I'm telling you, like the 7,500 to 7,515 gamma to me is like, that could be the potential resistance zone today in price. I mean, it looks sticky-ish, right? But I don't know if it pins there all day. But if we rally up to it, that's another maybe 20, 25 points to the upside. It makes that trade small. Like $1.80 becomes $1.90-ish, maybe $2. But the mechanical way to manage Flashpoint is 1 DTE. So if you're in yesterday, holding it to today, you make that decision today. It's like, if you don't want the time volatility, then cut it out today and just take the small loss. And you live to fight another day. Because on Monday, you don't have that luxury of the time. It's like Monday, it's like you need price to be back above 725 or 75.25, or it's going to be a full loss of, the 240 debit. GLD ratio spreads, I'm still in them. Because I don't mind owning shares. I mean, if GLD I get assigned, and nothing's really close right now. GLD, we're at 366. I have a 295. I've got a 285. These are like the buy puts. So I mean, I'll give you my where's my assignment price? 300. I'd be assigned at 300 GLD. Okay, I'll take shares of that. I'd be assigned at 265 GLD. I'll take shares of that. 270, 275. If I look at the probability on all these trades right now with an IV of, surprisingly, IV ranks only 37. Let's look at 300. For January, which is only 180 days out now. I mean, we're at the halfway point of the year. $300 strike. Let's take a look at that. Right now, the $300 strike is still way the hell out of the money. There's an 87% chance that this one doesn't get assigned. Fudge. JP Morgan, you a-hole. It's up to 345, damn it. Son of a biscuit. Well, that sucks for those newsbreakers trades, man. Shit. We've got to be in some small profit. That's so freaking annoying. That 10 cents now is 25 to 30 cents on MS. F&A Cotton. 10 cents is now 19 cents on Citigroup. Bank of America, JP Morgan, probably looking at small. I mean, it's fuck, man. Pardon my French. It's up $180 and now it's $25. You squirrely dog. Crap. Well, now in the day, I'm just annoyed that AVGO was a really nice winner for $300 to $400. And if it stays above 370, it's a $650 winner. Them's the breaks. Anyway, I'm not going to let JP Morgan slip into a loss. I mean, if it goes up any higher, like if it's retesting highs for the week, hang on a second. Let me look at the stock. Make sure I'm not just desperately. I mean, it's 345. Okay. I don't know. I mean, it's at a gamma level. It could just stick there for the day. It's hard to tell. I mean, I want this to fade back down, but after seeing some gamma here really quickly, it's like we might just maybe we're satisfied. Maybe it's like 340 to 345. If it goes higher, I don't want to be in this trade without taking a win. So this sucks, but I'll take the small win on JPM, and BAC is going to be a small loss. So yeah, I mean, newsbreakers just didn't have a good run this week. JPM was much different. Like literally looking at $150 to $170, that would have been a much more tolerable trade as far as like taking 100 and something percent profit. But I didn't think that we would have a financial run that was just running. I mean, this is up $6 on the day. I doubt the expected move on JPM was $6 today. So I'm imagining it's a pretty outsized move. BAC down $20. Max loss is 23. Actually, it's 46, 7-2 contracts. I'll take this off. JPM, F you, dude. I'm so mad about that one. That sucks to have a calendar spread up like 150% and then just watch it go flat. That's frustrating. Frickin' A, dude. 150. All right, JPM close for 151. That's a small win. Disappointing. I'll take the partial here. All right. Newsbreakers. JPM continuing to press higher. And what was 100 and 30%, what was a sizable winner is now a small winner. Rather than hoping price falls, which is not a good strategy. $1.50 credit. BAC closing at 11 cents credit. So net summary on all financials. JPM, small win. BAC, small loss. Citi, small loss. MS, small loss. They're financials, for crying out loud. Like, anyway, there's lots of earning seasons ahead. There's lots of trades to take. It's just stupid. So JJ, to answer your question on gold, yes, I'm holding those trades. Those are still pretty high probability of profit. And the 300 one is my highest strike. So if I take any assignment on GLD, it's at $300. That is a, what is this guy? GLD, hang on. Broke wing butterfly. That'll be interesting. And then 285. Yeah, so I mean, a lot of my strikes are all under They're all under $300, which I think absorbs like almost a 40 to 50% correction in gold. And I'm not saying that we can't have it, but if I own gold at a 50% discount, that is a lot better than chasing gold when it was running parabolic at those highs. So it is giving me the opportunity to accumulate once again, which even though it's been right now, like my GLD positions as a whole are red, but one way to get a nice outsized performance in my portfolio is being patient on gold and knowing that this drawdown right here, like gold is down. I mean, my portfolio is down about 50 grand. That's 50 grand of accumulation that I think ultimately can be worth $100 to $200,000. Like I'm just getting started, and a lot of this isn't really down as far as like it's a lot of volatility in gold, but it's not actually like P&L. I own the shares and I'm upside down. Like I own these shares, I'm down $600. That's not nearly as devastating as, oh my gosh, I'm taking all the. I don't have any assignment on GLD until it's under $300. So at this stage, I mean, the chart looks terrible. If you're a bull, the chart looks terrible. We've got the death cross, 50 and 200 crossing over, but put this in perspective. Okay. Take this whole freaking swing, this entire swing right here. So this entire swing, gold is at the 382. So is this a potential bounce? Maybe. Otherwise, equilibrium, which does mean more pain for more gold. And all this is like all the excitement for that 4 to 5 year bull market is just going to spend more time correcting. And then once we're done correcting, we'll start consolidating. Once we're done consolidating, we'll probably resume rallying. So for the patient trader, I would say the investor, gold still looks very good. For the short-term trader, gold looks terrible to be a bull, and the pain likely continues to slide lower. But I'm ready to accumulate. I'm happy to accumulate. I'm happy to own some shares of GLD at $300. Because if that's the case, and I actually own it with a ratio spread at like 290 or 280 or 270, I'll be down here towards this 618 retracement. I'll be how many percent off the highs? At $300. I mean, that's a 40% pullback. So most likely I'm going to be somewhere between about 40 and 50% discounts on GLD. Which means to me that if we are at a 40% discount, then I'm making like 75 to 80% to the upside on that trade. If I'm at 50% discounts, I'm doubling my money on those trades if we get back to these highs. I have GDX as well. GDX for miners. I think 60. I've got like a 75 by 65, I think. Uh, 65 by 61. So again, it's showing negative, but my line in the sand is 61. My break-even point would be like 57. Like 56 is my break-even. So what's 56 on gold miners? The trade's out to December, January. What's $56? Oops. $56 is right now trading for like an 18 delta. So I mean, I could have assignment. That's my break-even price. But if I went, let's say I own the shares of GDX. If I go out, let's say 2 weeks at a break-even price, I can lower my cost basis by another $2 to $2.50. That's a pretty good chunk. If I get $2 credit on a, 55 position, I mean that saves me another 3.6%. Like I'll repair it. I don't know how long I want to sit and hold GDX, but it's like I'd repair it. I think I can confidently lower my cost basis, repair the stock for a $200 to $500 winner. And if I'm doing this on this batch of trades, it's like if I turn every one of these into a $500 winner, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean, that's $6,000 without anything magical. It's just one trade. So yeah, I mean it's a lot of open volatility risk, and yes, there's cash secured puts, but they're at levels that I said from the beginning, it's like I'm willing to accumulate. I let go of a 4-year campaign trade on gold and silver that made me a lot of money, and it's hard to call the bottom. So the good thing is I started this process so far away from current price that I'm just sitting on, maybe a little bit more drawdown, but maybe still plenty of room out of the way. Okay. All right. Flashpoint. Yep. So the morning orders came back in. So it was updated. Here's SPX and XSP this morning. So pain level 7363, 7323. We're most likely not going to test those pain points today. But I'll throw it in. Now that they're out, I'll throw it in. So flashpoint for today. I just think we had to get that data ping for SPX and XSP. 7323. That's Tsunami 7363. All right, let's go SPX here. So going out Monday, Tuesday, so that's going to be the 21st. 7395. 7395. 275 debit. Oh, wait. 250. All right, that's fair. Like Flashpoint should be cheaper. 250. Good for the day. So 250 debit, good for the day. Going after alert says 330. I'm going to go after 350. I'm going to bump it up to 40%. Okay. And then the Tsunami trade would be the 335. 7335. 2 contracts. Good for the day. 275 debit. Like that 30% threshold there. Okay. So 275 debit for the day. 30% credit if then. And make sure it's good for the day only. Yep, we're good. 2 contracts. Okay. Good. All right. Really quickly for some housekeeping. Diamond members, I'm sorry we didn't get a chance to get a live session in this week. I know it's Friday. I've got some extra webinars and meetings today. We will have another live session next week, and also the team should be able to push out all of those best practices videos for you. I'll get those pushed out hopefully by next week. So look for that update, and then we'll have a live session next week. What I'd like to do is get the videos in the classrooms, give you like let's say a 2-day window to take a look at them. Each video might be like 15 to 20 minutes. And then we'll have a live class and hopefully address some additional questions. We can, focus in on one strategy, or we can just answer questions, go Q&A. All right, daily prop play. I put in a trade. It's pending. It's probably not going to get filled today, but I'm not playing around with low credits on the day. Waterfall income. We have 3 full winners today. newsbreakers. Very disappointed. Very disappointed that JPM had a good winner this morning. It probably would have been wise to take it and just. I know that if I took the profit on JP Morgan this morning, my net loss on all the trades would have been about 50 or 60 bucks. The reason I hung on to it was because if we just stayed around 337 for the day, it would have been worth maybe a $300 winner. So, same thing like AVGO, slippery management, JPM, slippery management. Unfortunate, but them's the breaks. That's the rub of the green, as they say. So it is what it is. We'll still put up a good fight with lots of newsbreakers trades. We've got plenty more earnings coming ahead next week. So buckle up and hopefully we can carve out some really nice winners. Double ups. I am not going to force that trade at the butterfly level. That butterfly spread at 75.15 or so. I mean, it looks like we may get up here, but I'm not going to hold my breath. And also, it's a $4 debit. I'm like, man. I think today it's hard to gauge price when we have a 0.8% gap, or the Nasdaq was down like 1.7% or something like that originally. So we're getting a lot of direction. It's a lot of indecision. So we gap lower, fight back, and we'll see what the day does. I mean, if the market finds a way to keep getting some bid back up to like gap filling, cool. But if it's just going to be like this dead cat bounce of like it's up today only to fade by the end of the day, probably doesn't look good for next week. So, I mean, if we want to have an encouraging sign of the range is still holding, then we'd like to see price get back above 7,500 today. If we're closing above 7,500, that gap's right there. We might still even squeak out a win for our engineered options. Maybe. But the week so far, if you look at the SPX candle for the week, it is red. So we need to see if this will just continue to sliver away, where the body will disappear a little bit. It's a lot of noise to go nowhere, and we're seeing quite a few of those days. You look back at this, it's a lot of noise to go nowhere. We have had some swings. I saw this interesting stat yesterday as well. We've had some swings of 1.5% ups and downs, and yet we're covering very little ground directionally. Take a look at this on the NDX. Okay. I want to say it maybe looks a little bit cleaner. Let me hide this for a sec. So the Nasdaq individual days, we've seen more 1% days up and down. And we've seen as many 1% days in the Nasdaq this year, 2026, as we've seen with like 2008, 2001, 2002. Like, it's interesting. I don't think it necessarily means like, oh, bear market's coming. It's just high volatility. And again, I think the big difference is it's so concentrated in chips and semiconductors and storage and AI that the IV rank continues to be extremely high. Look at this, by the way. Everybody see this? 35.9 IV rank. Okay. That's kind of average, maybe slightly elevated. Look at this on the NASDAQ. Or Qs. Yeah, Qs, not NASDAQ. Look at the SPY. 43.5. Look at the Qs. 77.7. This was at 90 something not that long ago. So we just have incredible implied volatility on the NASDAQ. So, I mean, usually the NASDAQ is about 20% more implied volatility than the S&P. It is literally showing that it's double the volatility, which is pretty crazy. So this just means that your P&L swings or the potential for a big outsized move and just like how far the NASDAQ can press one way or the other, it's just very high. I mean, usually I see high IV rank and I want to sell premium. And I have. We have quite a few trades on Project Options Edge on NASDAQ. But this is sustained for a while. Like even through the dispersion trade of February, March, when the markets were down, We had what? I mean, the S&P was down like 9.9%. I think the Nasdaq was down 13%. So roughly about a 30% more move. But meanwhile, the Ivy rank since the chip run of April and May into June, that chip run and that concentration, having these, little $100 billion chip companies that are now worth $500 billion and $1 trillion, that market cap makes this where it's not only volatile on the upside, but also on the downside. So it's look, I think as long as Nasdaq like holds up and maintains a bid, we're going to still see like the S&P and the Dow probably be closer and closer to all-time highs, and the Nasdaq continues to churn a little bit as that rotation is still pretty apparent. But it's very very high implied volatility. Like I said, usually historically you're getting about a 20% difference between S&P and Nasdaq. Now it's like literally double. So that is insane. All right, thanks, Yana. Good stuff. Yeah, Douglas, I'm gonna hang on to him. I mean, I didn't get the XSP defense trade to kick in. It didn't kick in, so I am just sitting on my participation in break even trades. So if they go, if price doesn't rally, then I will lose those two trades. This morning, it would have been lovely to see that defense kick in, get filled for 4 contracts at 50 cents, and I'd be staring at profit on the day. But not yet, not there yet. So the day isn't done. Let's see what happens. But I'm going to hang on to them for Monday, since right now, if I close them, it's like, what am I closing? Basically 2 losses, and by Monday it's going to be 2 full losses. But we'll see. I mean, my max risk is about $150, and right now I could close out for 104. I mean, I already let. I mean, AVGO, we saw it over 370. So there's your $350 winner, $360 winner that I let slip through my fingers. So a frustrating trade management. JPM let 150% winner slip through my fingers. It's at 345, which makes this winner even smaller. If we didn't, I mean, it'd be break even right now. So, but that one sucks. Like that was a annoying up $170, $180 to close out for $30. Like that sucks. So anyway, I'm just gonna let the $50 roll. Like my $50 of risk, I'll let it ride for Monday, and we'll see if the markets are gonna maybe make another fight. We do have some support right here. I mean, here's where it's not support. If the market's going to come up for the day and then fade back down, then I hope we have a bounce on Monday, because my engineering options may fill that defense trade. But look left, this is support. 74.27, 74.20. Today's low run 74.30. So do we come back and test that low and bounce back up next week? If we break it, we're vulnerable to the downside. If we hold it, then give me a defense trade, give me some net profit for engineering options. Okay. Jay just says, what do you think of a bear call spread ratio spread above SMH all-time high? Small risk. I mean, how far out are you going to go? I mean, this type of trade, honestly, I feel like SMH and kind of everything related to it, everything correlated with it, we could just have trades like this. Like very messy, very volatile. I don't think we necessarily take out this low, but we may struggle to really break these highs as well. So just be careful. But I mean, I don't know how good the premium is going to be. How far out you going? I mean, like a call condor. A call condor to me is better than a call ratio spread, because I don't want the undefined risk. But a call condor, like, I mean, I could look at something like that. Let's see, like we've got a 675. Okay, fine. Let's look at it. SMH. SMH. I don't know, dude. September maybe. Recent highs at 675. So it's probably won't offer a lot of credit, but if we did like a 65 by 75, that gets us $1,000 profit trap. Then 10 wide to 20 wide. I mean, it's not a terrible trade. I mean, Ivy rank is at 99. I've got $1,000 profit trap baked into this thing. Now this is telling me that I'm going to risk $900 to make one. If I accepted the trade as is, I'd get filled for like 86 cents. Like, here's what I can do. If I put this at $5, I risk 500 to make 500, but I also build out $1,000 profit trap above the expected move. Now, is that a good trade to call the top here? Probably not. So if I went after, let's say $8 credit, I risk 2 to make 8. How does that get filled? If price goes back to all-time highs, and then falls down, if this gets filled at $8, I risk 2 to make 8, and I have a huge profit trap at the top as well. Like, that's the only way I'd say, yeah, I'll call the top. Make it low risk. Okay. And at the same time, it's like it's tempting to look at a stock like this or the charts that are just representing everything AI, whether it's SMH or it's SOSX, whatever it is, and look at, is this thing going to catch a bid around the 200-day moving average? Like we saw today with AVGO. Did it catch a bid at the 200-day moving average? Yes, it bounced up over $10, $12. So if we are going to find this level, I'm sure there's some short-term interest there. That to me is a more interesting like scalp, as opposed to I got to call the top, I got to call the bottom. I don't know, man. With 100 Ivy rank, it's hard to know what the outlook is, because those swings are going to be fast and aggressive and just probably outsized moves. Because if it's an outsized move with 100 Ivy rank, it's like you're just talking about some nasty swings. Okay. All right. We're good on the day. Deanna's got, oh my God, I didn't realize that we just flew by for 2 hours today. Schnikes. A couple things. So we've got a little double up stream. Let me see if I can look at something today. It's too noisy today. So double ups, we still have that iron butterfly. That's fine. If that gets filled, that's a, super low risk trade, but we have to have a lot more direction to get there. On the like kind of standard double up strategy, I mean, 7,500 to 7,520 looks somewhat gettable today, but you can see that since we've been live today, this area, this area, this area, this area, it's far too noisy to say this looks like a great pin today. I have no idea. It's way too messy. Okay. All right. So today was a day to really just not force any trades. If you're taking any trades, make them low risk. We'll see what the rest of the day gives us. Could the market come back and retest today's lows? Sure. Could it retest the highs and maybe get into like gap fill area at 75 plus? Possibly. I mean, I'm reading that right here. There is enough gamma around 75.15 to 75.20. Maybe that is the market's agenda. Low to high, higher low to higher high. Try to fill into this gap area or try to come back into this sell off from yesterday. That's probably best case scenario on the day. I think what makes today ugly is if we come back down to retest the lows and we don't hold, because it makes us very vulnerable for Monday. Monday either, choppy on Monday, or Monday is, directionally it's like to the downside. Monday could get ugly very quickly if we break 74.25. Okay, so let's see. I'll move the chart alarm here. That's 7,500. I'll put a chart alarm here at the lows, and I will probably just kind of lick my small risk wounds today. Newsbreakers ended up taking a net loss for a couple $100. Pinch point down $30. Overall, it's like the week was good. Like I made money all week on double ups and daily profit play. So it's not a deal breaker. It's just I am disappointed that the financials didn't hang in there with a little bit more consistency and stability. It was a lot of movement on financials this week, but back at it. So anyway, let's fire up a little double ups. I'll be live this afternoon as well for a little double ups intro. And yeah, somebody asked about Netflix as well. Netflix is down on earnings. I'm still in. We have a ratio spread on Netflix. I think it's a 78/70. So I'm still willing to hang on to Netflix shares and just repair it. So I don't recall where the expiration is. I want to say it's a December, January expiration. I could be wrong, but let's go Netflix. So January, is Netflix going to be above 70 bucks? If it is, good. There's a winner. If it's hanging out at 70 bucks, there's an $800 profit trap. So I mean, my break-even price would be 62 on Netflix. The lows were about 65 on earnings. So I mean, that's decent. There's also a nice yearly moving average as well. The drawdown's been pretty sizable. I mean, Netflix is in a 52% drawdown. Snowflake looks okay. Price to earnings, 23 times earnings. Fair market value is 100 bucks. I mean, yeah, I'd own it at 62 and hold it for 5 or 10 bucks a share. You know, don't have to hold it forever. But that's my exposure on Netflix with the ratio spread. Try the replay. Replay what? For today? I mean, check it out on YouTube. All these sessions are archived on youtube.com/Chris Pulver. So you can always go back into those sessions and scroll to your part. So we're still on YouTube. Yes, we'll wrap it up here. Double ups, go ahead and fire it up, Deanna, and I'll be live again at 2 p.m. For another intro. I'm gonna still look. I'm gonna see if I can find something on the day. It just seems a little bit noisy on my gamma profile, so I'm not gonna force a trade right now. And having the market fight back a little bit is fine, but I'll just kind of hang in there and assess and just keep grinding. So, all right, check it out. I'm gonna end the YouTube session, and we'll see you later this afternoon. Thanks.